Hello investors, welcome to TradeBench and this is Kritesh. In this video we are going to discuss how you can monitor your stock portfolio. As creating a good portfolio is important, similarly monitoring your stock portfolio is also very important. It's really important that you continuously evaluate the stocks in your portfolio. Now before we begin you can monitor your stock portfolio, here are a few quick tips that I want to give you. First, you do not need to check the stock prices of your holding stocks hourly. Until and unless you are involved in intraday or actively trading, there will be no use of you to continuously check the stock prices of your company. You can check the prices of the company at the end of the day, or even better if you check it weekly. Second, never calculate the total net profit or loss of your portfolio hourly or at the end of the day. The stock market is very dynamic, and the overall profit or gain will change, and it will definitely change, and it can hit your sentiments if you see the net profit and loss hourly. Third, buy and hold is old. Gone are the days when you buy stock and hold it for 30 years, 40 years. Even the good performing stocks or fundamentally strong stocks can perform bad for few years and will not give you good returns in the future. If you want to get good returns from the stocks, you need to continuously evaluate the companies. At least you have to check the company's performance each quarter. So I will suggest you to not just follow the philosophy of buy and hold, but to continuously evaluate the stocks in your portfolio. Fourth and final, look for the unexpected changes. Sometimes you will see that the stocks in your portfolio might reach the limits, like upper or lower limit. Your stocks might increase to 20% or decrease to 20%. In such case, when the stock prices has risen 20% up or down, in such scenarios you need to investigate further that what has happened, why the stock has moved 20% up or why it has fallen 20% down. In such scenarios you need to evaluate your stock. Next, how you can monitor your stock portfolio. First, read the important news regarding your companies. There are a number of financial websites like Money Control, ET Markets, LiveMint, etc., where you can read the financial news regarding to your company. There's an easy way to read the news about your company in your portfolio. Just set Google Alerts. What Google Alerts will do, that it will send the news regarding your companies directly in your email, that is Gmail box, and it will send all the related news at specific times. For me, it sends in the night, so at around 9:30 or 10 I used to read all the news that's related to my companies. So this is an easy way that you can remain updated or informed with what's happening in the company. Further, you can also use financial apps and websites where you can make your portfolio and they will inform you or alert you about all the news regarding your company. Simply, if you make a portfolio in Money Control, they give you all the informations like AGM or a bulk deal, block deal, etc. So reading the news of financial important news is not that hard nowadays. Second, you need to check the quarterly results of the company. There are 4 quarters in a year and they end at March, June, September and December. Typically, a company announces an quarterly result within 45 days at the end of the quarter. So you need to read the quarterly results of the company. If you have less number of stocks in your portfolio, then reading the quarterly results of the companies won't be that tough. Let's say you have 6 stocks in your portfolio. So in every quarter of 3 months, you have to read just 3 stocks quarterly results. Further, do not get affected by if the stock has not given good performance in that quarter. In every business, there will be sometimes loss and sometimes profits. So if there is loss in that quarter, it doesn't mean that the fundamentals of the company has changed or it's a bad investment. However, if it's giving continuously bad results, then you might need to investigate further. Next, read the financial reports. Financial reports are the best place to track or monitor the performance of the company with its past performance. Let's say you can check the financial result of 2017 with the earlier returns in 2016, 15 and so on. Further, you can also read the strategies and goals of the companies in the financial report. You can find the financial reports of the company on the company's website. Next, you need to keep an eye on the corporate actions. There are different corporate actions like merger, acquisitions, demerger, bonus, splits, etc. All these can affect the share price of your company or its future behavior. So you need to remain updated with the and corporate announcements of the company. You can read these corporate announcement in the important news sections, or you can directly read on the websites of the company. Or if you have set the Google alerts, these announcements will be sent to directly to your email box. Next, you need to monitor the shareholding pattern. Here specifically, you need to monitor this shareholding pattern of the promoters. You can check the mutual funds or DII shareholdings, but they usually changes depending on the funds availability of the mutual funds. But it's the promoter shares that matters the most. Promoters are the insiders. They have the best information about the company. So if they are buying the shares or their shareholding pattern is increasing, then it means that they are confident about the company. And if they are confident about the company, mostly they are right that it will perform good in the future. However, if the shareholding pattern of the promoters are decreasing, there can be two scenarios. First, that they are saying selling the stocks just for obvious reasons like buying a new company or buying a new house or doing something personal. In such scenarios, you can relax. However, if the shareholding pattern of the promoters are continuously decreasing, in such cases you need to investigate further. Sixth and the final thing that you need to monitor is the promoter's placing of the share. A promoter's placing of the share is always cautionary and you need to continuously evaluate the placing. You can easily find these placings of the shares on the financial websites or on the company's website. So these are the 6 methods how you can monitor this portfolio, stocks in your portfolio. So let me summarize what we have discussed in this video. First, you need to read the important news about the company. Second, you need to read the quarterly reports. Third, you need to read the financial reports. Next, you can keep an eye on the corporate actions like demerger, merger, etc. Next, you need to monitor the shareholding patterns in the company. And finally, check the promoter's placing. That's all. If you follow these 6 things, you can easily monitor the stocks in your portfolio. I hope this video is useful to the readers. If it's useful, please give a big thumbs up. And if you have any doubts, please comment below. This is Kritesh signing off.